The foreign exchange market, or FX, has its traders keeping tabs on spot exchange rates in their trading. Foreign exchange is no doubt the most extensive liquid market globally. With trillions of currencies being transacted daily, the spot exchange rate is one of the factors that needs to be considered when exchanging flat currencies. Welcome to the Financial Markets Examiner YouTube channel, where you learn about Forex, cryptocurrency, and the stock market. In this video, we will learn about the spot exchange rate and how it works. What is spot exchange rate in Forex? The spot exchange rate is the current amount one currency will trade for another currency at a specific point in time. It is the open market price that a trader will pay to buy another currency. The spot rate is set by the Forex markets. However, some countries actively set or influence spot exchange rates through mechanisms like a currency peg. Currency traders follow spot rates to identify trading opportunities, not only in their spot markets but also in futures, forwards, and option markets. What is spot exchange rate? The spot exchange rate is best thought of as how much one would have to pay in one currency to buy another one at a moment in time. Spot rates are usually set through the global foreign exchange markets, that is Forex, where currency traders, institutions, and countries clear transactions and trades. Global Forex trading takes place electronically between large multinational banks, corporations, mutual funds, hedge funds, insurance companies, and government entities. Transactions are made for a wide range of purposes, including import and export payments, short and long-term investments, loans, and speculations. What you need to know about spot exchange rate transaction. The settlement date for Forex transaction is 2 business days after the transaction date. There are, however, exemptions. For example, US dollar versus the Canadian dollar transaction, which settles on the next business day. Weekends and holidays mean that the transaction date will exceed the 2 days. On the transaction date, the two parties involved in the transaction agree on the amount of currency A that will be exchanged for currency B. They also agree on the rate of exchange. Finally, the parties also agree on the value of transaction in both currencies and the settlement dates. If the currencies are to be delivered, the parties also exchange bank information. Speculators often buy and sell multiple times for the same settlement date, in which the transactions are netted and only the gain or loss is settled. Currency is never meant to be delivered. Some currencies, especially in developing economies, they are controlled by governments that set the spot exchange rates. What you need to know about the spot markets. The foreign exchange spot markets can be very volatile. In the short term, rates are often driven by news, speculation, and technical trading. In the long term, rates are generally driven by a combination of national economic fundamentals and interest rate differentials. Central banks sometimes intervene to smooth the markets, either by buying or selling the local currency or adjusting interest rates. Countries with large foreign currencies reserves are much better positioned to influence their domestic currency spot exchange rates. How to execute a spot exchange? There are a number of different ways in which traders and investors can execute a spot exchange rate. 1. The exchange can be made directly between two parties, eliminating the need for a third party. 2. Traders can use electronic brokering system for automated order matching. 3. Traders can also use electronic single or multi-bank trading systems. 4. Traders can be made by voice over the phone with a foreign exchange intermediary. The spot exchange rate is the price set by the Forex market at which you can buy a currency today. Think of it as buying on the spot. The settlement date for a transaction will take place 2 business days after for the majority of the currencies. We have come to the end of this video. Remember, this piece is not for investment advice but for educational purposes. Thanks for staying to the end of the video. You can get more videos on this channel by clicking the subscription button. Don't forget to also like the video. Thanks for watching.